What's happening, traders? I have just made an absolute stonk of a video for you and you are going to love it. But this intro is for those of you that have not picked up the supply and demand books yet. Click the link below and go and pick them up. Reason being that they have drastically changed the way I view the market, and don't take my word for it. Please speak to the community. Leave some comments down there for anybody that has actually purchased the book, and they will tell you how it's drastically changed the game for them. So do yourself a favor, click the link below, go and get that book, then watch this video. Welcome, traders, to another video, and we are going to dive into the Euro USD. I hope you've had a fantastic weekend, but now it's time to get back to the markets. As you can see, I'm currently in a long trade for a daily demand area, and I've got taken out of my previous trade. We're going to really dig into this, and I am going to give you the 5-sequence event chain in this video. I was really trying to hold out for the course, but there's no way that I can tell you how I got into this trade without displaying the 5-sequence event chain. So fuck it. You guys are going to see it here today, right? So let's dive in. So number one, I think if you go to my previous video, my previous market update, you'll see how I got into this trade from this area of daily supply and then moved it down. I took off 75% of the trade when it got to this daily demand area, and then I left my stops behind this H1 event break, and as you can see, the market broke through it. So let's see how I got into this trade using the 5-sequence event chain. So let's go down to the H1. Let's get rid of this actually, because it will make things a lot clearer. So as we know, with the 3-sequence event chain, what we look for is, number one, the market moving into this area of daily demand. So we can see that if we just get this is where that just missed it. So this was the original move where the market moved into the area of daily demand. So this is our event one, right? Actually, should I bother doing that? Nah, fuck it. You guys can just listen and know exactly what's being said. So this is our event one area. All right, we can see that the market held up here because, you know, we don't have to guess. We can see that the market touched it 1, 2, 3, 4 times, dipped into the area of daily demand, came back out, touched it 1, 2, another 3 times. It held, dipped back into the area of daily demand, and then finally we got a slow break out of this area here. So this is event 2, and event 2 has been broken. So once event 2 is broken, we are now looking for the structure, which would be our bullish engulfing structure, or a drop base or a basing structure at the birth of this move, which would be down here. But as we can see, that there is nothing that represents our structure down here at the birth of this move that actually led to this break. So we're going to have to play origins, right? Now, of course, this could not have worked. It could have just totally dived down and gone through and continued to the downside, even after taking me out here as well. That's just the way the cookie crumbles, right? But at the end of the day, this is further confirmation which allowed me to get into this trade with confidence, okay? It wasn't just luck. It allowed me, using the 5-sequence event chain, allowed me to get into this trade with further confirmation that this level right here is the level to take, and I'll show you now. And by the way, guys, if this level got broken, right, I would have attempted to play the 5-sequence also off this level here. Just saying. And if that broke, then fair enough, I would have had 2 losses. Again, just the way the cookie crumbles, right? So let's play it. So now let's just go back. So the market entering the daily demand, right, is event 1. The market breaking this area that is holding up price is event 2, okay? The event break is the most important part of this whole sequence, all right? Now we move back into another H1 area of demand. This is now event. So this is event 1, event 2. This is now event 3, all right? Because usually event 3 would be our trigger event, right? But in this instance, event 3, we basically play the same sequence out again, but we use the H1 as event 3. We then go down to the 5-minute, and we can see as the market entered this area here, this now becomes our event 4. And we have an event break, which now I took, because it's a 5-minute level, I took the whole zone from here to here as our trigger event, which is now event 5. So event 1 is the market moving into the daily area. Event 2 is the event break, the H1 area that's currently holding up price. Event 3 is the H1 zone that you have defined as an origin or a birth that's actually taken out event 2. You wait for the market to come into that zone, which is event 3. Then you drop down to the 5-minute chart and look for a potential structure, bearish engulfing structure in this instance, that's holding up price, right? Or the bearish engulfing structure that is closest to current price. And this is the bearish engulfing structure that is closest to current price. We didn't have no friction because the market just broke straight through. Nonetheless, I like friction, but sometimes the market does break through, but it's still valid. All right. It just hasn't got no friction, which I like, which makes it even more valid and gives me more conversation and gives me more confirmation and more confidence to actually take that level, right? And then the market moving back into this zone, which broke that level on event 4, is our trigger event. Okay, so that, guys, is the 5-sequence event chain. All right, it's basically playing out the same sequence as before, but just on a lower time frame. So basically we're using our daily time frame structure, which is like H1 to 5-minute, but we're using it throughout the sequence. So we're using the daily, the H1, then we're using the H1, which would be the normally trigger, but we're going to be testing out with the event sequence again on the 5-minute, right? So once that happened, once that got broken, I then put my limit orders in at this level here, which was a risk of, let's just, 4 pips. And the market has currently moved up 68 pips. So currently we're at 17 to 1 on this trade, right? So guys, let me just show you something here. Using the 5-sequence event chain has allowed me to take a daily demand zone of 28 pips down to 4 pips. So imagine what that does for your risk reward, right? With the 3-sequence event chain, of course, the same thing happens. With the 5-sequence event chain, again, the same thing happens. But where there is a slight nuance of the 5-sequence event chain is that it takes more of your time. It means you're going to have to be checking the market a bit more frequently to look out for this. The only reason why I managed to do this is because I came in from the gym after 5 o'clock in the morning, looked at the charts around 6, 7 o'clock, and then saw that 5-minute, right? Because I usually check the charts for like 5 to 10 minutes in the morning. But if you don't have that time, or you're not there, not necessarily you're not checking the markets that early, then maybe you could have missed that potential trade there, right? It just depends on your structure, your time frame, and what you're doing and what you're looking out for. But at the end of the day, guys, this has allowed me to get into this trade at a 4-pip risk and currently at a 68 pip target. And I'm currently at 17 to 1 on this trade, all right, which is absolutely phenomenal. Absolutely phenomenal. And again, guys, this is the power of the event chain. Now, let's take a look at something here. Let me get rid of that because it's quite annoying. So where did I have this up to? I had this up to this level here. So what am I doing now? What am I going to be looking at now with the Euro USD? So currently, if we look at one, I've already marked out an event break area here, right? So this needs to hold to let me know that the market is going to continue to the upside, right? This really needs to hold. If it doesn't hold, because I'm going to have my stops now right behind this. And if the market comes and breaks it, then obviously I'm going to be looking for a trigger event on the H1 chart to allow me to go back down to the downside. All right. Oh, hold on, what's going on here? That's way off. Let me just go down to the 5-minute quickly. Sorry, guys. It just really annoys me when this shit happens. All right, perfect. All right, so there's the 5 sequence event chain, guys. It's not really much to it, but it does take a bit more time and energy because you have to then play out the sequence again. All right. But for those of you that want even more confirmation on an H1 trigger event, then now you've got the answer to it. So let's go out to the weekly and let's have a look what's happening here. So from the weekly perspective, we can see that this could decide to push further up. We've got all red candles here. Now this guy, this weekly area of supply is nested inside a monthly area of supply. I don't want to draw all of this in because then it would look really, really messy and confuse the hell out of me. But I do know that this is inside a monthly area of supply as well. But we do have all red candles up here. Now, again, we've got two ways the market could go. It could push all the way up to this here and then maybe even push through, or we could get a continuation pattern that could push nicely through this area of monthly demand. And then I would like to see it come back, return, hit this area of weekly supply, and then get a push further down to this area of monthly demand. And let's go out to the monthly and take a look what's happening. Here we can see that this monthly area has been touched once, more like a level test. The market really has not returned after time, come back in and then push back out. But as you can see, guys, this weekly area of supply is tucked nicely inside a monthly area of supply also. But what we could also get is a continuation to the upside too. All right. So we're just playing the price action. We're just playing the event chain, and this is why the event chain is so powerful, guys, because it gives you multiple ways to confirm what direction the market is actually going in, and you just play zone to zone. There's no need for guessing. Okay, yes, we may miss triggers because the market just doesn't come up to it. That's the way the cookie crumbles. Sometimes we may miss an event break because we haven't defined it well enough for ourselves. That's just the way the cookie crumbles. You'll get better understanding the event chain and its nuances over time. And what you'll develop is certain nuances that you become accustomed to because of the way that you trade and the way that you use the event chain. And this is why the event chain is so malleable to each individual, because you get to use it how you want. You can use somebody doesn't even have to use supply and demand zone. Somebody could potentially be using support and resistance, or just areas of potential breaks where they feel the market could potentially turn, and then use the event break at that area, right? It doesn't even necessarily have to be used for supply and demand. You can use it how you want to confirm the areas of where you think the market's going to possibly turn. All right. And this is why it's so powerful. And this is why I keep on telling you guys, just keep on working it, keep on strategizing with it, keep on back testing it, because there are so many nuances with it that you could potentially become accustomed to, and blow it out the water for yourselves and really internally ingrain this in yourself in a way that the market becomes boring for you. And really that's what we're aiming for, right? We want it to get really boring, where we look at it and it's just like, oh my God, this is happening again. And we just play it, and then the event chain plays out, we make money, and everything is right in the world. So that is that for today, guys. I hope you have enjoyed this video. I hope that learning the 5-sequence event chain has opened you up to and opened you up to another world. It's just really for those of you that want extra confirmation that trigger event or that H1 level is definitely going to work. But then it also has the potential, you could have played the trigger and then the market moves up without officially going through an event break on the 5-minute, because maybe there wasn't one, or the market just had so much momentum that it just went through that event break, which would be event 4, and never came back to the trigger, right? So again, there's nuances to it, but I played it on this instance because I really wanted to make sure that trigger event, because it was an origin zone and not a birth zone, was actually going to work out for me. And I have shared with you the 5-sequence event chain. My day is done.